Happy Saturday, everybody. Welcome to Blue Collar Crypto. Um, got some information for you today. As you know, yesterday Gary talked about some of the reasons the market is crashing, Crypto G, and I will explain one of them a little bit more to you. Hopefully you'll be able to understand why. And there's two reasons actually. So let me share my screen here with you. So first one that Gary mentioned was the Japanese interest rates. And people might be wondering how that affects the markets. Well, if you take a look here, um, they only had a 0.25% increase, but for like almost 30 years, they've been able to borrow money for free. So you can go to the bank, borrow, say, $100,000 at 0% interest, and then go to the US and invest it in the NASDAQ or whatever and make money with 0% interest so you could pay your loan back just based on your profits. But with the increase now, the Japanese people are now having to pay interest, so they're starting to pull their money out of the market. There's trillions of dollars actually in that is invested between the NASDAQ and different higher risk assets. So that's why we saw the crash. That rate increase was introduced on July 11th, which I've marked off on the chart here. And this is the NASDAQ, and you can see how it's just gone down since. This is NVIDIA, one of the most profitable trades in the last year. And again, on the 11th, money was pulling out of it like crazy. So that's what Gary was talking about, the Japanese yen and interest rates. They are affecting the markets in North America and the whole world, to be honest. As far as Bitcoin, though, on the 11th, we actually started to climb and did not really change. So this may not affect crypto as much because it may be seen more as like a golden asset, which is holds more. And then it really, this I marked off here was the attempted assassination of President Trump, which affected the crypto market huge because, as we all know, Trump is pro crypto. So when they thought he had a huge, like I think it was a 75-25% lead over Biden to get elected, the market went crazy all the way up till the FOMC, which is the Fed meeting. Um, that was the next thing to affect us. And the FOMC basically said that they're going to keep interest rates the same. And he did not indicate whether rates would be dropping in September. He said it would be based on stats. So that kind of put the market on a bit of a downturn because they were expecting him to at least announce there's a high probability of an interest rate cut in September. But when he didn't do that, the markets kind of went down. And then what affected us on Friday was the unemployment rate coming out. Now, it wasn't a big change, but it was enough to create an indicator or set off an indicator that has caused the market to think we're going to hit a recession. And that's called the Sham Rule. He was a former employee of the FOMC. And basically, it is if the jobless rate based on a 3-month average is half a percentage point above its lowest point in the previous 12 months, the economy is tipped into a recession. So Friday, when they announced the jobless rate, it went right over, just over the 5%. So a lot of people in the economy or economics thought the economy is now in a recession. And here is like the chart, how the recession indicator works. And you can see is gradually been climbing. And then now we're at 0.53, which is over it. And if you go over the 3-year, 5-year, you can see this is another recession we hit, and that was COVID. That was a huge one, obviously. So that's quite a few of the reasons why the economy was affected, or the crypto market was affected by economic announcements, all of them coming at once. So for this weekend, I would suggest people be very careful in their trading. If they trade at all, I haven't traded once. I since the FOMC have decided to wait because the last time it was 3 days. I thought I'd be able to trade today, but after this announcement, it hasn't been going right. So for now, I'm going to teach you a Lux Algo trading thing I've learned this week, and we'll do it on Solana. I'll take this chart, and as you can see, it's dipping. I'm looking for it to go below 136. That's the 786 on the fib that I've taken from here to up here. If you want to know more about the fib, you can watch Blue Collar Crypto and Crypto G show a couple days explaining the fib, but this is on the daily. So this Lux Algo little trading tip I'm going to give you. We're going to go to the 15-minute, clear all the drawings. So we got a fresh chart, reset. Okay. And to put this indicator on, after you've purchased Lux Algo, you'll go up here, you go to invite only, and these are the ones I use. And we're going to use the price action, the signals and overlays. As you can see, it's one of the most liked trading indicators out there. So that's where you're going to click on it, and then it'll go in your charts. You'll go up here, and you're going to go to your settings. And for this style of trading, we're going to change a few things. You want to make sure your basic settings, the filter is at none, signal mode, confirmation and exits, AI indicator classifier off. You can ignore this because we're going to use an automatic one. You're going to turn off Smart Trail, turn on reversal zones and set it to 5. Go to the trend tracer and leave it where it is, and have the Neo Cloud on. You need the Neo Cloud for this. And these are a couple of the other settings you're going to look at. And the autopilot classifier, you're going to take it from off to long term. Let's see what else we changed. And hit OK. So the way this trading style is going to work, you're going to need 4 basic things to happen. You're going to need, if you're going to do a long, you're going to want to see a green buy signal with a plus sign behind it. Because this doesn't have a plus, we wouldn't take the trade. So go back to where we found a plus. Here's a plus. So you want to have a plus showing. You want a green candle. And you want the trend indicator to be in the blue. That's 3 of them. And then the 4th, the Neo Cloud, also this, which is this here. I don't know if you can see it. This thing that goes up, down, up. This is the Neo Cloud. It needs to be in the blue too. So once you have that, once your candle closes on that 15-minute, right here, you would enter your trade. And then you're going to put your stop loss just below the Neo Cloud, or just below the indicator here. And let it ride. And you want it to, as you see, as it goes into this red part here, once it touches it 3 times, you're going to take 50% of your profit out. So let me draw those out for you. So we entered here, and we had a touch here into the cloud, here, and here. So at this point, you would have taken 50% of your profit, and you let me put my stop losses in. So originally you would have had your stop loss around here. Then after it gets the 3rd touch, you're going to move your stop loss to just below the Neo Cloud here. and just let your trade ride till you get stopped out, which you would have got stopped here. If you hadn't got stopped out and it kept moving up, you just keep moving your stop loss up as the cloud moves up. If you're going to do a short, you use the same type thing, except you need to have a red indicator with a plus. If there's not a plus, it's not as strong a possibility, so you wouldn't enter it. So let's find the next place you would have entered would be here. So you got to have the red indicator. The trend has to be in orange, the neo cloud in red, and the candle in red. So you'd enter your trade here with your stop loss set just above the neo cloud right here. So you'd, in this case, you'd follow it down through the green. Here. Well, here's a touch and still in the green, and then it goes out and back down. This whole way you're in, oh, sorry. You're in profit. Once it hits, comes back in, you see there's an indicator, you're going to take profit there. But all this time it's going down, you can be moving your stop loss to just above the neo cloud, which is this red cloud here, ensuring that you're in profit even if you get stopped out. I've seen a video where this has been tested, and in 100 trades, it worked 92 out of 100. So it is a very good indicator if you follow all 4 rules. So this is what I'll be testing this weekend, if I can even get an entry. As you can see, that would have been one heck of a trade if you'd got into it, because that's where we're at now. So right now, I'm actually waiting for, hopefully, the green one to print somewhere, and then I'll indicate and try it. For now, though, I'm going to just go to a couple of my tokens and just put alerts on it. So if any of them hit, I'll be able to take it. And you just put your alert in. And I'm going to call it trend trade. If any of you have Luxago, want to try it, do it with a small amount, low leverage, just to test it. That's what I'm doing this weekend. I'm also going to be, if I do get in a trade, like on this one, when I'd be moving my stop loss down, each time I'd move it down, I would up my leverage a bit. Because once you're in profit, you're all good. Like, as you can see, those are all the places you move your stop loss. Every time this new cloud drops down, you can move it down with it or up with it if you're in a long trade. So hopefully that helps some of you understand one way of trading. Again, when I'm doing this also, when that green thing prints, make sure it has a plus sign. Otherwise, trading this way will not be as accurate. You can still trade, but you're going to jump out on the very first, when it gets to the top, when you see a dot like this, publish. Again, enter on a green dot. Always look at your indicator. The oscillator, when it's at the bottom, is obviously the best time to enter because it'll go up. I'm expecting around that amount I told you earlier for Sol on the 12-hour. Sure. Once it hits there, I'm expecting to see a green publish. Let's get rid of this. Put our fib back in. So in the 136, 135 area is where I'd be watching closely. So I'm going to set an indicator. Give me an alert. 137 area, just so I can start watching. So anyone trading this weekend, be very careful. Keep your stop losses where they should be. Don't enter a trade without a stop loss unless you really want to risk it. And yeah, have a good weekend, everyone.